One of the biggest RV dealership chains is fighting for its life, and it has taken drastic measures to raise cash and stay alive, including selling off 1/3 of its locations to dealership giant Camping World. I'm Jason Epperson, and this is RV Miles. Welcome back, everybody. A big shakeup in the RV industry is underway, and unfortunately, it might not be so great for the customer, in my opinion. Lazydays RV has 24 stores, and that might not seem like many, especially compared to the 100 plus Blue Compass dealerships or the Camping World 207 dealership locations. But Lazydays individual dealerships are generally quite large, and they're centered in well-populated areas. The company is big enough to be traded on the New York Stock Exchange, and its stock has been on quite the roller coaster throughout the pandemic and following downturn in RV sales. In early 2020, before COVID hit, Lazydays stock hovered around $4 a share before cratering with the rest of the market in March and then booming to a high of about $25 a share in the summer of 2021. It came back to earth and held pretty steady in the $12 range through September of 2023 when cracks in the armor began to show. Over the course of this year, while the rest of RV stocks have held pretty steady, Lazydays has slowly made its way to the bottom, sinking below $1 a share in the last few days. Companies like Camping World have still been able to turn a decent profit, while Lazydays started to post losses and began burning through cash. Why? Well, I'm not going to pretend to know all the reasons, but this has been a pretty tough market for dealers. Other dealership chains have seemed to hold on okay, while a lot of the independent dealers have shuttered or sold off. RV sales are dramatically lower than throughout the pandemic boom or even beforehand, really. This boom in RV sales began back as far as 2016. But on top of all that, dealers have to pay interest on floor plan loans to keep RVs on their lots. And we all know what's been going on with interest rates over the past few years. Interest rates rising with the value of RVs sitting on lots lowering is a recipe for disaster. And Lazydays has a particularly difficult problem of having perhaps a more higher end inventory on their lots. They have more motorhomes in the mix than a lot of dealers, and motorhome sales have declined at a much faster rate than the rest of the RV market. At RVmattress.com, you can get a real mattress for your RV for all the different weird platform sizes that RV manufacturers use, from the short king and short queens to the king that's not so wide as a normal king, but they call it a camper king, I think. Different twin and bunk mattress sizes and different thicknesses as well. Plus, their mattresses are toxin-free. They're made in their factory in Arizona, shipped to you wherever you are. You open them up, let them unroll and expand, and you can sleep on them that night. They also have a 120-night sleep trial, so you can be sure that you're satisfied with your mattress purchase. Go to rvmattress.com/RVmiles and use the code RVmiles to get 30% off. It's no longer 25%. It's 30% off now. Your next RV mattress purchase, rvmattress.com/RVmiles with code RVmiles for 30% off. On November 12th, Lazydays filed a notice with the Securities and Exchange Commission stating that they would be late in filing a required quarterly report. The reason they gave was dire. Quote, the company is experiencing significant and immediate liquidity challenges and continues to have substantial doubt about its ability to continue. It goes on to say, in light of those circumstances, the company has been engaged in ongoing discussions and negotiations regarding potential amendments to credit agreements, potential financings, and other potential transactions to obtain additional capital. Essentially, they don't have enough money to pay their debts. So what to do? Well, already this year, they've rebranded. They lost their CEO and replaced with an interim CEO. They replaced their COO and they put in place a new board president. But now it's time to start selling the farm. They've made big moves to reduce debt and try to get back into operational shape. Lazydays has agreed to sell 7 dealerships, including the real estate they sit on, to competitor Camping World for $65 million. The dealerships are located in or in the vicinity of Phoenix, Nashville, Milwaukee, Council Bluffs, which is next to Omaha, Elkhart, Indiana, Portland, Oregon, and Woodland, Washington. What's more, Camping World will acquire 9.7 million shares in Lazydays stock in the transaction, which I believe will make them the largest shareholder in the company, depending on the additional stock offerings they are making to other investors as part of the restructuring process. They have gotten some capital firms to invest some money and some new stock offerings in the company as well. Lazydays is also selling an 8th dealership to a separate buyer for $8 million. They've also worked to restructure their debt with banks. So it looks like they're going to be stabilizing here, but by handing a third of their dealerships and a large share of the ownership over to their biggest competitor. I know we all like the idea of independent dealerships, but I think it's incredibly important for these mid-sized dealership chains to survive, unfortunately, to fight against the very thing that's happening here. Camping World's continued growing stranglehold over the RV industry. I'm not hating on Camping World here. They've made a lot of smart moves during this boom and bust and saw a lot of things others didn't, but their size allows them to drive so much of what happens in the RV industry. They get tons of exclusive floor plans. They can push pricing and quality, and affects everything else that gets sold to the rest of the dealerships out there. And now they're 10% larger just in this one move. Founded in Tampa, Florida in 1976, Lazydays RV was originally owned by the Wallace family. With only 2 travel trailers and $500, they launched their business. During its first 5 years, the dealership limited itself to travel trailers and mini motorhomes, and sales grew to $13 million by 1980 and $50 million by 1983. In 2022, the company brought in $1.3 billion. Thanks so much for being here, everybody. I'd love to know your thoughts on the current dealership market out there and what your experience has been visiting some of these RV dealerships over the course of this downturn in the RV industry. Leave them in the comments. Thanks so much, everybody. We'll see you next time. Bye-bye.